dad always used to say, cut your coat to your size. Being a young kid running around, seeing both my parents in entrepreneurship. From a very young age, I started to get involved in the stock market because an uncle of mine at the time was an engineer in an oil and gas firm, and at that time oil and gas stocks. Later leaving university, testing the waters with things like Forex, which so many of us did, and lost everything. Don't let your wins get to your head, and don't let losses get to your heart. This vision isn't really mine, it's God's vision. So I can think as big as possible because he's the one that's going to finance it. He's the one that's going to effectively back me up. Tariffs here, tariffs there. We saw some of our clients that were generating 50% of their revenue in the States. All of a sudden, their budget, their expenses through the roof. Debt is when you're not thinking about the return that I'm getting from this. Money's relevant if you don't have peace.
Hello and welcome to the Faith and Finance podcast brought to you by the Pentecostal Community Bank, where we explore real conversations happening at the intersection of faith, money, mindset and community impact. My name is Brenda Emmanus and it's always my pleasure to bring you some brilliant guests where we have a deep dive and conversations about how our beliefs, behaviours and decisions shape how we grow, build and steward what we have. I'm so excited today to have with us our special guest, Demi Ariyo. Demi is a self-made entrepreneur and finance professional with a wealth of experience across business, lending and community finance. Demi brings such a brilliant insight and cultural understanding to conversations about money, particularly within Black communities and entrepreneurs navigating growth. In this episode, he'll share his journey and attitude toward borrowing and credit, his views on cultural fears around debt, and how finance reframes responsibility, courage, and stewardship. Demi, welcome. It's so good to have you here.
Likewise.
Let's start from, well, not the very beginning, but just tell us your journey and how you've got to be doing what you do.
I think it really starts from, being a young kid running around, seeing both my parents in entrepreneurship. Helping them with the finances, be that kind of counting money based on kind of the goods they've just sold in the house. Or
were they both business people?
Yeah. So my dad was into business in Nigeria. My mum was into business more in Europe. Mm-hmm. So like most Nigerian women do at that time anyway, she used to sell things like material, gold, and a lot of those sales were made actually in the house. Wow. And she used to do things like ask me and my sister to count the money that she just made. So that was my kind of introduction to money. And something that was really interesting, right? And I was talking to a friend about it, was the fact that a lot of my friends, and nothing against them, just a lot of people I know used to take money out of their mum's purse. Oh wow. When they wanted things. Yeah. And one time we was all just around the room and was talking about taking money out of your parents' purse to buy sweets or whatever. And I don't know why, but it was never something that I did.
We had a bottle where we used to put pennies and change in. And I admittedly, sometimes when I wanted fruit salad and blackjacks,
used to go in there and take it. But honestly, I mean, I don't judge anyone for doing it, because I know when you're a kid and you want something, you do what you can. But I just never did it. And as I got older and I started to realize that I was somewhat different when it came to money in comparison to some other people, I started to realize these different things that just made me different when it came to finances. And I think, finance was always something that intrigued me. It was always something that I was interested in. And from a very young age, I started to get involved in the stock market because an uncle of mine at the time was an engineer in an oil and gas firm. And at that time, oil and gas stocks and shares were doing very well. A lot of it was gambling and kind of, very risk on. But at the same time, it was a great introduction to the market, to kind of get to understand the market, to also get to understand what it meant for a company to do well.
What age were you then?
I was probably about 17, 18.
Wow, that's quite impressive.
Yeah, I was probably about 17, 18. So in its reality, right, what happened is a few of my friends that were a lot older than me worked in banking. One of them gave me a book called The Naked Trader. And that's what kind of got me interested in investing in stocks and shares. And then my uncle at the same time had just moved to the UK from Nigeria and got a contract. I can't remember what oil firm it was for, but an oil and gas firm. And again, oil and gas stocks at the time were doing very well. The AIM market, which is the UK's alternative investment market, was doing very well, which is kind of like a baby to a little brother to the FTSE 100. Right. And a lot of these oil and gas companies were going public on that. So
you
market.
Understood all that language very, very
from
early.
A very young age, yeah. So finance was always something of interest of mine. So that led me to just doing different things, opening up dummy accounts with people like Hargreaves Lansdown. When I went to university, using my student loan to invest in my first few oil and gas stocks. Later leaving university, testing the waters with things like Forex, which so many of us did, and lost everything. I can see Femi had that same scenario. And then later that brought me to actually kind of moving into the corporate finance world, the working world, where initially I was working at a few trading shops, just doing kind of being on the sales floor, selling different products. And then that led me to working at a place called Obsidian, which by that time was effectively my kind of first, I'll say, corporate gig. And Obsidian was a corporate financing boutique or investment banking boutique, predominantly focused on raising capital for corporates in emerging Africa. But what was really interesting is that Obsidian had this ethos of how do we bring low-cost capital to those that have somewhat been underserved.
Right.
And I'll explain what that
like
means. Right?
Our communities.
Our community, right? So if you think about emerging Africa, that's the risky strip. The piece that goes straight across the middle. Not the meaner strip at the top, which is kind of like Morocco and Egypt, and not the places like South Africa. It's the Nigerias, the Ghanas, the Zimbabwe's, the Kenyas, that strip. And when you're lending in those, when you're lending in those countries, you're typically lending in your local currency.
And at very high interest.
Which has very high interest rates. Now, because of the fact that Africa's predominantly focused on leveraging its commodity resource, a lot of those businesses, despite having to lend in local currency, if they had the relationships, if they had the bankers, the kind of cross-border relationships, effectively, could lend in dollars.
Right.
So Obsidian's ethos was, how do we bring low-cost capital from the West, from the EMEA region, into emerging Africa? And by doing so, how do we cut down the cost of capital that the indigenous entrepreneurs have to pay? So when they effectively build their businesses and sell these businesses, they naturally reinvest back into the things that they know. Because at that time, there was capital going into the region, but a lot of it was foreign capital. And what would happen when foreign equity enters the region is...
It dominates, for starters?
Not just it dominates, but it influences, right? But more importantly, once that foreign fund, has reached its maturity of 5 years or 10 years...
Can they pull it out?
Takes that capital
and that's vulnerability.
Takes that capital straight back out of the region. And what that means is there isn't that growth that we need. So how do you empower the indigenous entrepreneurs? So that's what Obsidian was all about. But by working at Obsidian and, at the same time getting involved in the debt markets and starting to understand what credit was and, equities and all of these different things, different forms of credit, I started to also pick up on different nuances and different things as well, such as, working with this maybe family-owned business in Nigeria that's doing extremely well, but the governance isn't the way in which the UK firm or the South African firm or the firm from the Middle East.
And that's probably just from lack of experience or not doing it on a different level.
Lack of experience, being a first-generation entrepreneur in some cases. Sometimes just not having the expertise. Sometimes not realizing what it takes to raise capital. So what you'll often find is, let's say someone like Old Mutual, which is a South African bank, but they were based here in the UK. They had branches across the West, and they used to do a lot of investing in the region. But they may, if you want to raise a £5 million, £10 million facility from them, they would require you to have your accounts audited by a top 4 accountant. Not in all cases, but in most cases.
And most businesses on that level don't have that kind of access.
And they have the access, but they don't realise to access West capital in the West. That's what's needed.
Right.
So governance was often an issue as to why the companies that we was working with, for example, were unable to, if not raise the capital they required in dollars, raise the capital when they required it in dollars. Right. And often what our job was to do is to help them restructure their I wouldn't say their board, but how they're thinking about raising capital and put a governance in place that gives the lenders or gives the investors that comfort that, okay, we can lend to this corporate in Ghana, Nigeria, Mozambique, wherever it was.
Before we fast track onto your own business, which is so brilliant, and in terms of a concept, I come from Caribbean parents, and I know the thing I always thought, you must save, make sure you save money, don't waste money, and it's a very different mindset, which made me, I think, in hindsight, made me very cautious about spending and not very confident. I'm not even talking about money in the way that you talk about money. When we look at our generation now, audiences that listen, is that something you think you would advise, that we should get comfortable, we should almost have a love affair with finance and money or knowledge, build a relationship with it?
I think you're spot on, and I think this is actually something that we see quite regularly, right? This is one of the reasons why so many of those corporates that we was working with when I was working at Obsidian, had issues with raising capital because they were used to actually not being able to access capital and building from scratch, which made them great entrepreneurs, but unfortunately placed a ceiling above them, right, when it comes to competing on a global or at a global level, right? Because you've got your counterparts in the West who might have an oil and gas company, and you've got an oil and gas company in the Africa region, but they've got access to capital markets. You're very reliant on the reserves that you've built up over the years, or the reserves that your family's built up over the years. And yeah, you might work with the banks here and there, but you don't have that same depth in regards to access to capital or capital pools. And it actually comes from, like you mentioned, just the way the West was built and the way, I wouldn't say third generation or third world countries or third world continents, but if you think about it, the West was built through debt.
Yeah,
right.
But there's some businesses here would be quite happy just to have that one business and build and know their networks, but they don't think on the ambitious global level which you talk about. Do you think you would change that? You think, hold on,
I mean, I would love to change that, but it comes back down to cultural nuances.
Yeah.
And one of the reasons why Lendoe, we believe, had, it works, and it works in the UK, particularly the markets that we serve, is because those same cultural nuances that those entrepreneurs had when I was working for Obsidian, that came from the Africa region, are the same cultural nuances that those from the diaspora, like yourself and so many others that have set up businesses here in the UK, still have.
Yeah, but let's talk about Lendoe then. Let's tell it, what was your vision for it and how it's evolved?
So our vision is to see a world where access to finance isn't based on bias, which often is the case in the UK. And this is subconscious bias. It's not bias that people are aware of often, I would hope. But actually it's based on merit. So it's based on the numbers that you're doing. So it's based on effectively the data. But unfortunately, because bias is such a real thing, subconscious bias is such a real thing, you often find that the credit models that are built for a lot of the lending markets in the UK may have some bias in them, which may mean those that are from certain communities, certain migrant communities, may have a disadvantage when it comes to accessing finance. The level of expertise and understanding of how capital works in the West, when you've come from a first generation background, my mum always used to say, in this house it's Nigeria, outside it's the UK. You're taught in the way of the Nigerian way, or of the Caribbean way, and nothing that is save, not spend, and particularly not borrow.
Exactly. Yeah.
So our whole thing with Lendoe is how do we firstly change those perceptions, but also how do we build a business that has a level of influence in creating that world that we wish to see.
But let's clarify, how are you different, for example, from a bank or a VC or angel investor?
Good question. So firstly, we solely focus on non-dilutive products.
What's that? So the layman.
So we basically focus on credit.
Right.
And often banks, yes, focus on credit, but also they focus on things like deposits, mortgages, which is a form of credit, which we don't focus on. We only focus on B2B credit. Sometimes they have things like wealth management services, financial advice. So we're somewhat different in the sense that we're very much focused on solving this access to finance problem for businesses, right? But the similarities we have to a bank is we like to have that same level of relationship with each individual customer we have. In fact, it's probably not much of a similarity anymore because most banks have, as you can imagine, they've closed down their branches. So you don't have that relationship.
I find that hard up to now.
Well, exactly, right. And then in regards to a VC, VCs tend to focus on equity, right? Yeah. So that's taking a proportion of your business or a portion of your business and trading that for cash. And as your business grows, their stake in your business grows in perpetuity. And then when you have a liquidity event, be that an exit or
so it's about profit for them, actually. Even though they've supported you, they're still... Yeah, it's a win-win.
It's a win-win, and it's about profit for us as well, right? Because we want to build a sustainable business. But I think where VC is somewhat different is a lot of those from our community don't have businesses that are set up for VC capital, because VC is all about how do we get a 10x return? Right. How do we get a 20x return? Which means sometimes you have to be $1 billion or £1 billion business for it to make sense for them to invest, or eventually. With Lendoe, we focus a lot more on businesses that are sustainable, that are profitable, if not profitable, 6 to 12 months from profitability, that are growing and that are often lifestyle businesses to some degree. So on the verge of lifestyle businesses, yes, at the same time, some of the businesses we have are quite large and they're moving out of that lifestyle phase and now very much thinking about growth and VC global. So yes, we do have that. However, when we first started serving those businesses, they were in that 1 to 20 million pound mark, had ambitions maybe to 2x, 3x, not 10x.
Right.
And with the non-dilutive products we provide through our series of lenders that we work with, we're able to help them with working capital, help them with growth finance, help them with project finance on a non-dilutive basis.
Financial wisdom isn't gained by accident. Financial security is not reserved for the privileged few. Getting your money right requires intentionality, practical resources, and education. That's why the Pentecostal Community Bank offers a wide variety of financial literacy workshops, courses, and support to help you get your finances back on track. Find out more by visiting pcbank.co.uk. How Lendoe works? Do you work with a community of investors who pump money into potential good businesses?
Really good question, and that's probably something I should have mentioned when it came to how we started Lendoe. So one of the things that made me very focused on credit was when we initially started Lendoe, we was a balance sheet lender. And the way we got...
You have to explain like a layperson to me.
Okay, sorry. So when we initially started Lendoe, we was lending our own money.
Oh, right, okay.
That a community of investors had provided to us, which actually came with the back of a church fundraise. It's a very interesting story. But long and short, it was... Yeah, it's a very interesting story, and I probably go.
Did you help save your church? Is that what it was? Raise money for your church.
Raise money. I wouldn't say save necessarily.
They may say save. They saved you. You saved them.
Yeah, they did actually. Yeah, and I wouldn't say it was just me. So it was myself and a bunch of other young adults came together. What had happened was our church at the time was moving from a charity to a CIC, and as you know, a CIC is a community interest company where the members of that CIC own the assets.
Yeah.
A charity is a charity company where the charity commission
and there's governance and all of that
assets. Yeah. And there's governance, which there should be, and a whole bunch of other things. But more importantly, the charity commission own the assets.
Right.
And what had happened was the church had realised that actually with the CIC, all of the donations and all of that other stuff could be effectively the people from the community or people from the church effectively owning and supporting with the assets. And they believed that they wanted to move to a CIC, and that meant that moving the assets out of the charity to the CIC. But what it also meant was that they set up a new entity,
right?
A new
which
business,
needed money,
a new limited company, or a company limited by guarantee, which not just needed money, but in moving over the building from the charity commission to the CIC, the banks that had previously provided them a mortgage as a charity 10 years ago, you could say, when it came to setting up their CIC, mortgage wasn't interested.
Oh, right.
And this was because we had, in that time, gone through the 2008 recession. Banks were no longer lending as much as they once did. A lot of the community banks at the time that couldn't meet certain government thresholds in regards to liquidity and cash reserves had to shut down. So there was very little options for the church. And so the options got so small that they ended up taking what they thought would be a short-term, a 3-month loan from they call it a bridging company, which is a bridge loan. And that ended up being a 12 to 18-month loan, which almost resulted in them losing the building.
Because there's interest on top of that as well.
Because there's interest, because it's meant to be short-term. But because when they moved the asset over into the CIC, the bank still wasn't willing to give them the loan 12 months later, 18 months later.
Welcome to the life of black businesses.
Welcome to the life of not just black businesses, but businesses that are early stage in general.
Right.
And that's one of the reasons why Lendoe exists, because we've identified these data gaps that unfortunately the banks just aren't able to, through their systems, I'm sure they would love to if they could, but through their systems, aren't able to resolve and provide the support that they should be providing if they had the capacity. But long and short, that resulted in the church almost losing the building. We did a crowdfund, myself and several other young adults in the church. We did a number of other things other than the crowdfund. We've done hair days, we've done movie nights, and we charged people. We raised the money any way we could, but the bulk of that money was raised through me talking to family and friends, through others in the church, the other young adults putting up cash and saying, we'll give the church a short-term loan or a 2-year loan. And the idea was that over that 2 years, they will build up the credit history necessary to be able to go to a bank, because the banks always said to us, you're too early stage. When you have 2 years worth of accounts,
then we can talk.
Anyway, long and short, it's a very long story short, it didn't happen with the banks 2 years down the line. And, we had raised all of this money and the investors expected their money back. And I had to then tell them, you know what, the banks aren't lending to us. But actually, I think I found the real problem here. Because the moment that scenario happened where we raised the capital, I had a bunch of people approaching me saying, you know what, the banks are also turned me away. And that's how Lendoe came into existence. And that's why we started lending effectively the money of those in the church and family and friends.
It's a real sort of role model example of, I guess, of a Garveyite approach to helping each other out, isn't it? That really works.
Yeah.
And having taken the risk in doing it, you're reaping the rewards of it.
To some degree, yeah.
I love that. I love that.
Yeah.
I haven't thrown any scripture to you yet. Let me just say, Proverbs 13:11 tells us that wealth gained little by little grows. So do you have a sort of a long-term approach to finance, or are you a get-rich-quick kind of guy?
This is a really good question, actually. I would like to say I'm a get-rich-quick guy, but I can see by my actions I'm not, right? And the reason why I say that is because I'm a strong believer in, build riches when you're young and turn that to wealth as you grow, right? But with Lendoe, for example, we've decided to go the long way rather than, we've been offered all types of offers from different people who I wasn't sure whether or not they kind of fitted with the values of Lendoe or really wanted to understand the problem that we were solving. We decided to bootstrap, and we decided to continue to build the business brick by brick. So I'll definitely say I'm more of a long-term thinking approach. But when it comes to, all right, if you want to take advantage of a problem and an opportunity, you really want to see how do I push as much capital into it as possible and get as much out of it as early as possible before the market floods. And in that case, you really want to generate as much revenue from that opportunity as possible.
And you are a man of God. Let me give you a psalm then, 24:1. This reminds us that everything belongs to God. So how does seeing money as entrusted to rather than owned change how your approach to, say, investing or borrowing?
That's a really good question as well. And why it's a really good question is because I've been thinking about this a lot recently.
What's triggered that?
This is the whole new year, and also it's been so Lendoe. I actually went full time with Lendoe in 2019, end of 2019, and it was meant to launch in 2020, and then COVID happened.
As it does,
and as it does, right? And then the whole model changed. But because it's been 5 years since then, coming into 2026 now, right? At the end of last year, I was thinking a lot about, wow, so what does the next 5 years look like? And, thinking a lot about, well, this vision isn't really mine. It's God's vision. So I can think as big as possible because he's the one that's going to finance it. He's the one that's going to effectively back me up. And I think that's what's brought that kind of thinking about of, this isn't mine. This is God's. And how do I do what he wants? Like, what would he want from me with this? Because often when you think about yourself and this is, you see it as this is mine, you're limited in how you can, what you can see.
So do you think it's given you that faith entrusted gives you a sort of more confidence to operate as a business person?
Definitely. I mean, business in this environment is so difficult. And anyone who's employing people at the moment will tell you, minimum wage is continuously going up. Salaries, people's demands are continuously going up. Inflation's high. So staff are seeing, your staff or your employees are seeing that. And naturally, even if you're paying them above minimum wage, they're constantly pushing for more. The real level of inflation is a lot higher than what the CPI states when you think about food
you
inflation.
Feel it.
You feel it, right? You go to Tesco and you used to spend £50, and all of a sudden you're paying double.
Yeah.
But inflation's grown by 3%. No, it hasn't. Food inflation's significantly higher, right?
And when you see it, you do go, oh God.
Your budget is always, you're just thinking, what's going on? So, it's a very difficult time for people in the UK and to run a business, which naturally one of the biggest resources or biggest assets of a business is its people. So half of your expenditure is on people on average, and considering that most people now need such high salaries, it's very difficult to run business, particularly when you're starting up, when you're loss making. So being a man of faith and believing that I'm trusting this plan that God has given me is very important, because you have to look past the now to be able to see where is this going and where can I see this going. And I was listening to a sermon, I think it was on a Sunday, and the pastor was talking about the fact that actually in reality, you have to, this is something that we all know, you have to live by faith, in the sense that you have to speak into existence the things that you actually want. You can't live by, this might happen, that might happen. You have to live a life where you continuously speak that this is what is going to happen, and then go for that thing. And that's how you bring things into fruition. That's why it says faith without, firstly, works without is dead, but also the power of the tongue it can create.
So do you think that's where prayer and discernment comes into it? Even particularly if you're making like big financial decisions, and it might not be in business, it might be, or you want a loan, or you're a mortgage, or you need to buy a car. Do you think prayer should always come first, or faith should always come first?
I think
because there is a practicality of it, whether you can afford it, whether you've got a job that
It's a really good question. I think there's a level of that kind of wisdom, knowledge, and understanding that you need, right? If you're going to take out a car and finance, which is a liability, do you have an asset that's going to pay for that liability? That asset could be a job. That asset could be an investment. That asset could be a family friend. That asset could be a parent. But do you have the means to pay for it? I can't remember the scripture, but there's a scripture that talks about the fact where it was I can't remember what people it was, but they wanted to build a tower. And I think, I don't know who said it, but they said, would you start building a tower without calculating the cost? Right? And it's super important that as Christians, we understand what, like, for example, beginning of the year, what's your budget for the year? What holidays you're going on? What big expenses are you planning on having, on participating in? What big things what weddings do you have, right? And then work backwards from there, so you can plan out your year as you plan to go on, right? And then you can start working towards, if you realize your budget is low, you can start working towards generating more by speaking it into existence, that I'm going to get a better job. I'm going to be able to attain this thing that will allow me to buy that car. And that's how I think we should live. So I don't think it's a level of prayer. I think, or you could say it's a level of, prayer brings revelation. So yes, pray. And in your time of prayer, God will give you revelation, which will tell you how to manage those things that you want to go for.
So it does include discipline as well as wisdom.
Of course, definitely. Reflection. I think anything in regards to finance includes discipline, because it's like a double-edged sword. Particularly credit, right? Credit is a double-edged sword, because credit could be the thing that helps you live the lifestyle you want, because you don't have all of the money today to buy the car, the house, and everything else you want. So you often have to finance it. So it can give you the ability to live the lifestyle you want and provide the lifestyle you want for you and your children and your family. But also, if you do the wrong thing with credit and you take out a loan and you invest in the wrong thing, it's closed.
It's value system, right? Yeah.
Mm-hmm. It can put you in a position where it can also be the thing that tears you apart. We see people often come to us, they've taken out 5 different loans from 5 different high-cost providers.
Juggling paying Peter from Paul.
Right. And initially, those loans in a great economy, which was favorable to these kind of businesses, was helping them grow. But now it's killing them.
In debt. So what one piece of financial advice would you give to somebody who wishes to be more serious about their life and about their finances and get their house in order? It's the beginning of the year, so if someone says they sit down and reflect, what would be the one piece of advice you would give from your experience?
My dad always used to say, is it cut your coat to your size?
Yeah.
My dad always says that. And fingers can never be the same. Right?
When they chop them off.
No, in the sense that 5 fingers are never the same size.
That's true.
And the reason why he used to give me those 2 quotes is because I think he was trying to tell me that face your front, don't look at other people, because where you are, where someone else is never likely to be the same. But also, if you cut your coat to your size, you're normally all right. You'll normally be okay. And if you're an entrepreneur, cut your coat even less than your size, even more than your size.
Be more frugal.
Be a lot more frugal, because one thing I always tell entrepreneurs that you work with, you haven't got a job, you don't have job security, and you've seen what Trump's done, right? Tariffs here, tariffs there. We saw some of our clients that were generating 50% of their revenue in the States. All of a sudden, their budget, their expenses, through the roof. All of a sudden, so we're in a macro environment that you just don't know what's going to happen next. Yeah. So if you're an entrepreneur...
It's a volatile world.
It's a volatile world. And even if you're an individual, right? Even if you're a individual working in a job, you have to be frugal. But you have to be very frugal if you're an entrepreneur, because you just don't know what's around the corner. And often, I say with entrepreneurship, you are exposed to every movement that happens. When you're in a job, you get the average mean. So I worked at a place called Zopa for a very long time, and they used to constantly fundraise. Zopa was the world's first peer-to-peer lending company.
Right.
And peer-to-peer was what we did for the church. You bring pairs together and you come together, put the money together, you lend it out. And they're now a bank, potentially going to go public. But what was really interesting is I remember the times when I heard in the grapevine, oh, they're trying to fundraise to go to the next level. But my pay was never affected by that because I wasn't the owner of the business, and I was shielded. And when you're an entrepreneur, you have that level of, all right, I'm stable, I'm steady, right? But when you're the owner of that business, like whoever the guy who owned Zopra at that time, he's probably being affected by, the ups and downs of the world, the macro environment. And that's what it's like being an entrepreneur. That's what it's like for me now. And
does it excite you as much as causing sleepless nights?
Yeah, I think it is. I mean, it does, right? Because, you could see, like, for example, one of our clients recently got a very big contract with a major supermarket. And I'm talking about in the tens of millions. And we had recently helped that client raise, I think, to the tune of £1.5 million. So we played a small role in helping him get there.
That must be so rewarding.
And that is, super exciting, particularly seeing him grow from what was a relatively small business, being underestimated by the banks, and now what he's about to do, I'm sure the banks are going to be knocking, right? So that's exciting, right? I might fly out to see the launch, to go to the launch and all of those things, right? But at the same time, you have your lows, right? Where unfortunately clients might not survive. We saw a lot of clients last year, unfortunately, have to go into administration, have to go into voluntary liquidation. And I had a few steepness nights because they was like, all of the loans that I had taken out, what are we going to do about them? How are we going to negotiate? And I'm thinking, well, we have to think of something that works for you and the lender, because the lenders are also a customer of ours.
Right.
And I have to manage that relationship. And I saw a lot of that in 2025. So it has its ups and its downs. But I think, it's a saying, don't let your wins get to your head and don't let losses get to your heart. And I think if you keep that mentality and you keep just walking with that, then you'll be okay. Well, touch wood.
Yeah. Well, not just the entrepreneurs. I guess there's got a lot of us who rely on credit card, for example, but there's a reluctance to kind of borrowing. And how do you think is the best way to view credit strategically and wisely?
Good question. So I always say, if you're taking out credit, you really want to use it as leverage, right? Leverage to accelerate you to growth or accelerate you to diminish to disaster, to diminished state, right? And that's why it's a double-edged sword. So I would always advise people, if you're taking credit, know what leverage it's going to give you, know the benefit of why you're taking it, and keep that in mind. So I mean, we often talk about credit, and the old colleague of mine used to say it, let's take the dirty out of debt. Right? Because debt is often seen as dirty. Credit is often seen as a bad thing.
What's the proverb? 22 says that the borrower is a servant to the lender.
To the lender.
That makes you feel vulnerable.
But what's really interesting, right, is most of these lenders you see, they're lending the bank's money, which is our money. But are the banks servants to us?
Yeah.
So it all depends on how you. Yeah, I mean, the proverb is right in its reality, right? But it's about knowing your rights and knowing how you manage yourself in that borrower-lender relationship, right? And I think when it comes to credit and taking the dirty out of debt, and just that feeling of fear not to take credit, I think as long as people understand the multiplier effect it's going to provide to them, and that could be, all right, you're living in central London or London, let's say, and you're just about to start a family, and you want to buy a house. Because you want to have someone that's stable for you and your kids, and you want to not have to think about, a landlord kicking you out and your kids out. And
you want the stability.
You want that stability. So the asset there you're buying is peace. But you can't pay for a house in cash. If you've saved a lot of money, but often most people won't, because the way the UK is set up, it's not set up like emerging countries where you might get paid annually for a contract. It's set up where you get paid monthly. Right. Even if you've got a company,
if you're freelance, you may have to wait longer. More people are freelance.
And I'll talk about freelancing and working capital and trade cash flow conversion cycles shortly. But going back to the average man that wants to buy his house and look after his kids, he's buying the asset of peace. Is he willing to pay 5% on a mortgage for that peace?
That's a personal question, isn't it? It's a very personal question.
And this is why you have to ask the question: am I willing to pay that interest for that peace? Because that peace could cost him his life. That piece could cost him his marriage.
Yeah. So what would you say is the difference between, say, unhealthy debt and strategic borrowing? I
think, and I don't have, I have no and I'm not speaking against things like buy now, pay later and payday loans, but I think unhealthy debt is when you're not thinking about the return that I'm getting from this. And the return doesn't have to be money, like I mentioned before. The
peace
return
of
is
mind
peace.
is I'd pay for peace of mind.
Right?
Yeah.
We all get pieces. Without peace,
Yeah, it's a
money's relevant. If you don't have peace, how many people have money and they can't sleep? It's not a very good life, is it? So I think it's about what is the return that I'm getting from this. And what I often see is, a lot of these payday loan companies have started to come out of the woodwork. A lot of loan sharks, a lot of private capital from America coming into the UK, trying to take advantage of vulnerable people. And I think a lot of the opportunities they provide can sometimes be unhealthy, because what they do is they sell you convenience.
Well, it looks so seductive, doesn't it?
It looks so seductive. Right?
Yeah.
Well, what else looks seductive? The devil.
The devil looks seductive.
That's how he wraps himself in, in seduction. And then once you're in, then you're in and you can't get out. But I think that's unhealthy when, everything you buy is on. And again, I'm not judging anyone because I don't know anyone's circumstances. But if everything you're buying is on buy now, pay later, then can you really afford the things you're buying? And there are certain circumstances where things may differ. So, for example, you mentioned freelance. We have some entrepreneurs that are, alongside being entrepreneurs, they are creatives and freelancers as well. So they get paid through invoices, which can take some time.
Yes.
Right. And that's why they leverage tools like buy now, pay later. But if you're someone who is, again, just working a normal job, getting paid monthly, do you really need to have everything on buy now, pay later? Why can't you live within your monthly salary? And I think that's when it comes to unhealthy.
Yeah.
And what strategic credit is when you're, leveraging. So, for example, someone's buying an asset of some sort at a discount. So a great example is we had a client who was coming to Boxing Day and they realized that they can negotiate better terms with their supplier, their manufacturer, if they bought more.
Yeah.
And based on their margins, their unit economics, buying more would mean they could generate a lot more, right? Because the cost is lower of the product. So they leveraged credit
to do that,
to buy more, to generate a higher profit, then paid the credit back, which was at a fixed capped cost. That's where you're being a lot more strategic. And that's just a business example, but there are examples for individuals.
Yeah. So it is a case really of having courage to be entrepreneurial or to make sense of it, but also having faith that it'll be all right. So it's being mindful, and I guess this is what you're saying.
Definitely. I think going back to that point on faith is more about you, right? You can't have faith in your lender, right? Because your lender might not have faith, right? Faith is more about you as a person, right? Like this business, I believe, based on the data that I have, this business can get here or go here or achieve this. And I have faith that based on the data that I have, based on the belief that I have, based on the experience I have, I can get there, right? And then based on knowing you can get there and realizing now I've done my calculations, I need X more, I may need to go and borrow that money, fine. But you're borrowing that money based on your faith that you're going to get somewhere, which is based on facts and reality. So it's not just faith, because one of the things I'm part of is something called the Men of Purpose Foundation, which was initially set up by a gentleman called Lord Hastings and a guy called Ross.
Great guy, yeah.
Yeah, and we basically help a lot of brothers when they're vulnerable brothers, basically, when they're in need of capital, when they're in need of cash. We have a foundation that provides them cash. And sometimes we hear because all of the brothers are brothers, right, in Christ, we hear some things that are quite concerning in regards to faith. And this is why it's quite a touchy subject, because they say things like, well, by faith, I'm going to get through this very tough time where I don't have a job. And unfortunately, I'm not sure how I'm going to pay my mortgage or feed my kids. Yes, faith is believing that God's going to help you out of the situation, but God does everything he does for a man. So
what do you say to them? Because there'll be people at home thinking, I want to do this, or I've got this dream. But like I guess faith justifies them wanting that desire, because you think it's going to be all right, I'll be all right. I think I've done that myself, thinking I'll be all right.
We've all been there, right? And I think what I would say is, yes, you need faith, but you also need a process. God expects you to plan. God expects you to be diligent.
Fail to plan to fail. What's the other way around? Plan to fail to plan.
Yeah, God expects you to be diligent. You've got people like Daniel, he was very diligent. You look at people like Samuel. All of these people in the Bible, they were very diligent.
I'm sure there's some women that we can reference as well.
Deborah.
Yeah, thank you.
Very diligent. I think, is it Ruth? No, who's the one that married Boaz? Ruth.
Yes.
Ruth. She was very diligent. She learned from Naomi. She didn't just go and try and marry Boaz. She learned the process. And actually, it was Naomi's advice that caused her to be the choice of Boaz. So it's not just faith, because she could have, she went through a treacherous time, right, Ruth? But she could have just had faith that God's going to fix everything and she's going to do it all on her own. But no, she knew she had to submit to someone who had been through it, who understood the lay of the land, who could guide her. And I think those people that you're talking about that, they just want to do something and they've got a dream, go and find guidance, go and find people who have done it. Jesus even had someone that he went to that had done it before him, right? And that effectively kind of baptized him for him to be the next man, right? And then he baptized the disciples. So there's a process to most of these things, and I think as Christians, yes, we hear about the miracles, but how long are we going to rely on miracles?
I'm so excited now to hear what your plan is for Lendoe in the next year or so, what your vision is for yourself, for your entrepreneurs and the people that you work with and our community.
Yeah, so we've got a lot of plans. To be honest, we've actually been quite quiet for this is my first podcast in about 2 years.
Really?
Because again, we had to go into a time of planning, thinking, actually got married. There's quite a few things that happened, but it was a time of reflection and the business has changed somewhat.
But it's important to do that, pause and reflect.
Most definitely. It's always important to do that. And our plans, we've got a lot of plans. One of our plans is we want to support more entrepreneurs coming out of high cost credit. So last year, our numbers are out. If you go onto our Instagram, our socials, you see our numbers, our 2025 numbers. Last year, we helped entrepreneurs save an average of £5,000 to £12,000 in monthly repayments that they were paying in high cost loans. That's the kind of impact we want to make, because yes, commercially it's great for us because we add significant value to our clients and they can pay us. But for them, it's great for their families. It's great for people that they're going to employ because they have that additional revenue on a monthly basis. And rather than paying a high cost loan, they can invest that into jobs. They can invest that into their families. They can invest that into themselves. So we have a big focus on how do we solve this high cost credit pandemic that we're going through. We have a few big announcements coming at the end of the year to do with what we want to do for the community and how we get to what I would consider to be our big goal. How do you put £100 million into the pockets of underestimated entrepreneurs? Which isn't our goal for this year, but it's a goal of ours. We are going to be running a number of events, again, very much focused on supporting entrepreneurs who have unfortunately been caught up in high cost credit or may just need advice on how to think about their plan for the year strategically. They're going to be quite exclusive events, to be honest, but we will eventually open them out to the public.
Lots.
We've got something coming out towards the end of the year, which is again going to replicate our Lendoe numbers, which we released two weeks ago, which is again going to give a lot of facts and figures because, men lie, women lie, numbers don't. Let's talk about the numbers, right? It's going to give facts and figures about how those from underestimated communities are doing. 62% of those that we financed last year were from ethnic minority backgrounds. Now, when you compare that to some of the other organizations that are trying to support these communities, it's this very stark difference. So we have a lot of data on a community which is somewhat overlooked and underserved, which makes that data very valuable.
Data's everything.
Right? So how do we release that data in such a way that banks and other institutions that have more capital than us, more access than us, can say, hold on a minute, we actually want to be a part of this market. So we want to do a lot of that, a lot of stakeholder advocacy stuff. So
well, it all sounds so brilliant and exciting and more importantly, inspiring. Yeah. I want to thank you for your grounded conversation and all your brilliant practical advice. I'm sure our audience have learned so much from that, and good luck with everything.
Most definitely.
And I'd like to also thank everyone for listening. If like me, you've been so inspired by what you hear, continue to watch us and subscribe and share. This man is definitely worth keeping in contact with and learning more from. And we'll see you again. God bless.